here with CNN-IBN's Booster Budget special coverage, and we're trying to break the budget fine print down for you. My colleague Karma Paljor is here. He's simplifying the budget of Finance Minister Jaitley with Team Deloitte.
Thanks for that, Ananya. Well, for the middle class and all working class, in fact, there is some bad news, I should say. If you look at this particular graphic that we have, limit on tax-free withdrawal from National Pension Scheme, PF and Superannuation Fund, 40% of the corpus. After that, for the rest of the 60%, starting this year, you will be taxed. Isn't it now? Trupti from Deloitte is with us. So she's been trying to get in the fine print, which means that we'll be taxed. So it is a big setback for the middle class.
Yeah, so these are two separate proposals, and I'll go into that in a bit of a detail. Today, as far as NPS is concerned, the benefit is in the form of pension beyond retirement, and that is taxed as salary income. The quantum is comparatively much lower than Provident Fund withdrawals. So for NPS, a lump sum of 40% of the corpus can be withdrawn, and that will be claimed as tax-free. That can be claimed as tax-free. Beyond that, the rest of it, which goes as pension, annuity, will be taxed as salary income, as the current state. Provident Fund, on the other hand, up to 5 years, if you've contributed, but if you withdraw it before 5 years, it is taxable. But beyond 5 years, the whole amount is tax exempt at the time of withdrawal. Unfortunately, what they have proposed is that trying to bring in parity with NPS and superannuation, they're saying that it's only up to 40% of the corpus that will be considered exempt. Anything beyond that, which means 60% at the time of withdrawal, will be considered taxable. This we see as a huge impact. This was another surprise as far as the contribution that is made on a year-by-year basis by the employer. Today what happens is, whatever employer contribution to Provident Fund is there, there is no threshold limit for the exemption. Trying to bring it at par with the way the employee contribution is treated for ATC, which is basically a deduction available under ATC up to 1.5 lakhs, they're saying that the employer contribution is also going to be limited, along with superannuation contributions, to 1.5 lakhs each. So there is a limit of 1.5 lakhs per annum of employer contribution that will be considered exempt. Anything beyond that will be considered taxable. There would definitely be an impact to the highly paid salaried employees, because 1.5 lakhs is really not too much, given the fact that ATC already includes a whole lot of other expenses and investment schemes.
So as far as PF is concerned, very simply put now, if you worked for 5 years, you're going to buy a house, and you're going to need, say, about 10 lakhs more to buy your house, which means when you're trying to withdraw that money, 40% is tax exempt, but for the 6 lakhs that you withdraw, you will have to pay certain amount of tax to the government, otherwise, which was exempt till now. Let's also look at the other one, which is going to hit us. This one, as far as now reforms, tax reforms are concerned, Indirect Tax Dispute Resolution Scheme 2016 introduced for cases pending with Commissioner. This is retrospective?
No, so they're trying to reduce litigation. There are a plethora of cases that are out there which have not yet been resolved. They're trying to bring in a dispute resolution scheme which would take care of not only the indirect tax disputes but also the direct tax disputes, and a mechanism has been put in place for the payment of tax and a lower amount of penalty in case there is any additional taxes that have to be paid, which will possibly clear up a lot of these cases that are pending with the authorities.
Right, so this is good news. The taxation on PF and NPS certainly not being welcomed by many. It's back to you, Ananya.